Hello and good afternoon. I'm Yago Kira. I'm the adult librarian at the Miriam Matthews Hyde Park branch of the LAPL. Today's program, Credit Reports and Scores, will be facilitated by Delmy Martinez and Michael Bailey from the Alliance for Economic Inclusion. This program is intended to support financial literacy and is brought to you by the Los Angeles Alliance for Economic Inclusion and the Los Angeles Public Library. Delmy Martinez and Michael Bailey from the Alliance for Economic Inclusion will talk about how your credit history can affect your access to credit, loans, jobs, housing, insurance, and other important services. They will also provide tips, strategies, and best practices on raising and maintaining your credit score. Please send us your questions throughout the program, and we'll have a brief Q&A after the presentation. Please don't forget, Financial Planning Week runs until October 16th. If you have any questions or are interested in any other programs associated with today's program, please proceed to lapl.org/financial-planning for more information. And before we begin, just so we're reminded, on the 23rd at Hyde Park, we're going to have our Friends of the Hyde Park Book Club at 4 p.m. There will be HIV testing at 11 a.m. on the 27th, Wednesday, October, 11 to 3 p.m. And on the 27th of Wednesday from 1 to 2, we'll be doing the Neuroplasticity Club and speaking about African-American poet Danez Smith and selections from Homie. Without further ado, Delmy Martinez and Michael Bailey from the Alliance for Economic Inclusion. Thank you.
Good afternoon, everyone. My name is Mike Bailey, and I am with the Alliance for Economic Inclusion in Los Angeles area. Today, we will discuss credit reports and how the information in your credit reports can affect many areas of your life. How many of you, generally, will ask, have pulled your credit report in the last 12 months? Or have had a creditor pull your report? Your credit history can affect your access to credit, loans, jobs, your housing. It affects insurance. It also affects other important services that you may to receive. Understanding your rights helps you know and protect your credit history. Next slide, please. And next slide, please. Jump a little bit ahead. As a disclaimer, this presentation represents, again, the views of the speaker and not necessarily those of the agencies, again, that we represent. This presentation cannot be reproduced or distributed by a third party or on a third party's website without prior authorization from the AEI or Alliance for Economic Inclusion. Next slide, please. Again, we're going to cover credit reports and scores. Next slide, please. And next slide, please. And so again, our key takeaway is, again, your credit history can affect, again, access to credit, loans, jobs, housing, other important services, again, that you may wish to receive. Again, I cannot stress how important it is to know your rights as it relates to, again, protecting your credit history. Next slide, please. And so what is in your credit report? It includes your name and address. It includes your credit card payments and other loan payments. It includes any bankruptcies that you may have. It includes student loan payments, credit card limits. So those are just some examples of things that it does include. Things that it will not include generally is your age, but it will include your date of birth. It does not include your income. It does not include cell phone plan payments. It does not include a debt-to-income ratio. It doesn't include your savings account balance or debit card purchases. Next slide, please. So what is included in your credit report? So just to summarize, credit reports include your identifying information, again, your name and your address, any public record information such as bankruptcies and foreclosures. It also includes seriously delinquent child support payments. It includes, since 2018, any civil judgments, tax liens, and any other public records if they meet the new 2018 reporting standards. Your credit report will also include any accounts that have been assigned or sold to any collection agencies. And there's a special section for that in the credit report. It also includes all your credit accounts, and it's going to list your current and closed accounts, the types of accounts that you have. Those could be installment accounts, such as auto loans and mortgages. But it also includes revolving accounts like credit cards. It'll also include the credit limit on the accounts and the amount of the loan. It includes the terms of the arrangement and the payment amount. It includes account balances, account history, often called the payment pattern. It includes the date the account was opened. And if applicable, if you close an account, it will also include the date the account was closed. It also includes the name of the creditor. Your report will show any inquiries that you have. So whenever lenders or businesses request a copy of your credit report, those are called a hard inquiry. A hard inquiry provides full access to your credit report in response to an application that you've submitted. And a hard inquiry does affect your credit score. It will also show any soft inquiries. These are limited inquiries to your credit. And usually they're pulled by an organization looking to offer you a new credit card or a creditor to whom you already have an account with, maybe trying to provide you an additional service, but they want to check your creditworthiness again before they actually offer that service to you. Those are, again, the differences between a hard and a soft pull. And just one thing to note, you pulling your own credit report will not affect your credit score. Next slide, please. All right, so listed here are the nationwide credit reporting agencies. There's Equifax, Experian, and TransUnion. These companies that make credit reports can be called credit reporting agencies, credit bureaus, or credit reporting companies. Again, all the same. There are, again, 3 nationwide credit reporting agencies. If you have credit history, you likely have at least information in one of the 3 reports, if not all. You do have a right under law to see the reports, which we'll talk about a little bit later. In addition to the nationwide 3 credit reporting agencies, there's also specialty consumer reporting companies. They provide reports that help other companies make decisions about providing consumers with products and services. For example, if you're applying for an account with a financial institution, they may run a check systems check. Or if you're applying for a job, they may run a type of background check or housing. It could be insurance, cell phone plans. So again, there's different companies that provide information about you. And again, they're just categorized as specialty consumer reporting agencies. Next slide, please. As I just mentioned, everyone has a right to receive a free copy of their credit report. Currently, you, under the law, are entitled to 1 free credit report every 12 months from each nationwide credit reporting agency. And so that's one free report from Equifax, that's one free report from Experian, and that's one free report from TransUnion. In order to get a copy of your report, there is a central location, so you can go to annualcreditreport.com and access any of the three credit reports, again, Equifax, Experian, or TransUnion. If you don't want to go online, you can also call and request a copy of your credit report. So it's highly recommended that, again, you frequently check your credit report. And next slide, please. There is a additional access that's provided to consumers during the COVID-19 pandemic, which entitles each consumer to one free credit report every week versus on an annual basis from each of the three nationwide credit reporting agencies. And so again, you can get a weekly report from Equifax, Experian, and TransUnion. This will run through April 2022. It was actually renewed, and so it has been extended. And so again, you can receive a copy of your report from those agencies. Again, I just want to stress that you should be checking your credit report on a regular basis to make sure that the information that's in the report is correct, especially any new payment arrangements or any temporary forbearance payments that you may receive due to the COVID-19 pandemic. If you identify or note any errors in your credit report, it is important that you notify the credit reporting agencies directly. Next slide, please. I also want to, again, just make you aware that you want to watch out for imposters, especially as it relates to people that claim that they can fix your credit for you. Again, if you have a delinquent item on your report, it's rare. If it's actually your debt, there's no way that the item is going to be, I would say, removed from your credit report. The only time that something will be taken off your report if it is something that is inaccurate. And again, beware of imposters or people that have signs out saying that, again, that they can fix or repair your credit. If you need a copy of your report, again, go directly to annualcreditreport.com. And again, you can order a report directly online. You can call, or you can actually order one by mail. Next slide, please. In addition to receiving a report on a every 12 months under the mandated law. But again, due to the COVID-19 pandemic, everyone right now currently can receive a report on a weekly basis. But once things go back to the 12-month period, you're also entitled to a free report if you receive public assistance. You're entitled to a free report from each of the three agencies also if you are applying for a job, or if you're currently unemployed and you're looking to, again, become employed within the next 60 days. If you're a victim of identity theft or financial fraud, or if there is a state law that provides, again, that you receive a free copy of your report. And last but not least, you're also entitled to a copy of your report anytime that you are denied credit service, such as applying for an apartment or employment. Next slide, please. Knowing your rights, again, can save you money. If you understand your right to dispute incorrect or outdated information, you are more likely to take action to improve your credit history and credit scores, which can potentially lead to more favorable credit or service arrangements. The credit under your rights, again, just know that, again, by knowing your rights, you'll be able to determine if your rights have been violated. You'll be able to take steps, again, to protect your credit history, and you'll be able to take steps to improve your credit history and your credit scores. Next slide, please. The Fair Credit Reporting Act, again, is a federal law that provides you with rights related to credit reporting and other consumer reporting. So anyone who uses a consumer report to deny you for credit or offer you credit on less favorable terms, or if they decline you for employment based on information contained in a credit report, have to provide you, again, free copy of the report. And that is mandated under the Fair Credit Reporting Act. You also have a right to dispute incomplete or inaccurate information. And again, the reason why you can do this is due to the Federal Credit Reporting Act. Fair Credit Reporting Act. And then last but not least, credit and other consumer reporting agencies must also correct or delete inaccurate, any incomplete, or information that cannot be verified within 30 days after they receive a dispute. So again, all of these things are mandated under the Fair Credit Reporting Act. Next slide, please. So our key takeaway here is your credit history can affect your access to credit, can affect your access to loans, jobs, housing, insurance, and other important services. So understanding your rights will help you protect your credit history. Next slide, please. And so now I'm going to turn it over to Delmy, who's going to discuss credit scores.
Hello, everyone. In this section, we're going to talk about credit scores. I hope that some of you have had the opportunity to see your credit scores at one point. It is very important, but if not, this is a good starting point for you to start learning what a credit score is and what it means. Next slide, please. You can take steps to improve and manage your credit scores. This includes paying your bills on time and as agreed. Next slide, please. So what is a credit score? A credit score is just a number based on information that is reported to the credit agencies. And this really predicts, the likelihood that you will pay your bills on time. People with higher credit scores represent less risk to the creditors. So, usually you get better interest rates and things like that. Next slide, please. So who uses the credit reports and scores? A lot of companies use the credit scores and reports and scores. Credit report is a summary of your financial liability, for the most part, your history of paying your bills on time. Some of the places that uses your credit scores and your reports is the financial institutions, some landlords to see, if you'll be able to pay your rent on time, utility companies, some cell companies, insurance companies in some states, employers, they do check, especially if you work in the financial institution, they want to make sure that you have a good credit score because you will be giving advice to some of your clients about their credit. So they want to make sure that you are taking care of your credit as well. And some state agencies, they check your credit score for some professional licenses, such as mortgage loans originators. They want to make sure that, they have good credit score. Next slide, please. So 5 factors in general FICO model. This really helps you understand how the credit score is analyzed and put together. And actually how also you can, by using this, how you can improve your credit scores. So first, payment history. If you pay your payments on time, that's at 35% of the whole factor. Amounts owed. If you use only 30% of your credit card limits, your credit score is going to get better. So if you have $1,000, you only use up to 30% of that limit, and that really helps you improve that FICO score. Length of credit history, it's a 15%. So opening and closing, credit cards sometimes is not advisable. Credit mix, having different credits is just 10%, and new credit is 10%. Next slide, please. So look at this. What is a good credit score? Right here we have an example of good credit scores. FICO scores range from 300 to 850. This chart offers this chart to help what scores these particular ranges and what they mean. So exceptional credit, 800 to 850. Very good credit, 740 to 799. A good credit, it's 670 to 739. A fair credit, 580 to 669. And a poor credit is 300 and 579. But don't worry, if yours is low right now, we will help you figure out how to get a better credit score. And having high credit score also does not mean you are financially stable or that you are successful. High credit score simply means that you are presenting a low risk to lenders and others who use credit scores to make decisions about you. Next slide, please. Wow, what happens when we have no credit? Having no credit reports or scores. Credit invisible. Many times we think, oh, I'll pay cash, I'm okay. But sometimes that can be a credit invisible. May result in having harder time getting credit or a loan, renting an apartment, getting favorable cell phone plans, obtaining some jobs, turning on utilities without paying a large deposit. So a lot of the, landlords or the utility places, they check your credit to see how you have been paying your bills in the past. And this can really affect, their decision on giving you credit. So you become a credit invisible when you really do not use credit on a regular basis. So next slide, please. In this section, you can take steps to improve and manage your credit scores. This includes paying your bills on time and as agreed. So this is our takeaway from this section. Remember, credit, you can change your credit. You can improve your credit. So in this takeaway section is we can improve our credit score. So let's talk about building and repairing our credit. Next slide. Build, repair, and maintain a productive credit history. What does this mean? We will discuss in this section how to do this. So let's look at the next slide. Your credit history does not have to be your credit future. Remember that we can always work to improve our credit. Just because it's low right now doesn't mean that it has to stay low always. Next section. So what is a productive credit history? A productive credit history means having a credit history that helps you do the things you want to do without having to pay more to do it. For example, get a car loan, buy a house, qualify for an apartment, get a job. Next slide, please. Build credit. How do we build credit? A good idea to start building our credit is a secure credit card. Usually cash secure credit, you can use only the limit that you put in. It's, you put the money in there and it's like a deposit, and that's the money that you will use for your credit card. You will still have to pay your credit card every month just because you put the money into a savings account or whichever way they tell you to do it. you still have to make your payments every month, and this will help you build your credit. Credit building loan, similar to secure credit cards, usually cash secure with a credit limit the amount of cash deposited. So that's another way to build your credit. Store or gas station credit cards. Actually, you know what? For me, these are the best. You need a new TV? Go to Best Buy, to a place, where you can go buy that new TV and you make those monthly payments. And as you make those monthly payments, this helps you establish your credit. Gas. Use a gas card. Make sure that you pay your credit card on every month, as much as you can. And this will help you build your credit. These are things that we use on a daily basis. Make a large down payment on a purchase or negotiate a loan balance. If you can afford to make large down payments on a car, you wouldn't need to borrow as much money. So, making a large down payment helps you with building your credit as well. Next page, next slide, please. So how do we maintain our credit? We work so hard to keep a good credit score. How do we maintain this credit? Let's talk about that. Continue to pay your bills on time and as agreed. Doing this will have the greatest impact on both your credit reports and credit scores. It is the most important strategy for maintaining a productive credit history. Continue to pay down your debt balances. If you're paying your bills on time and as agreed, this is likely already occurring, but make sure you see this reflected in the balances you show on your credit reports. Try to just make sure that you can pay your balances as much as possible every month. Keep the amount of credit you use as low as you can. 30% of your credit card limit, that's really will help you keep and maintain your credit. Check your credit reports on a regular basis for any errors. Dispute any errors if you see them. Keep good financial records. Keep your credit score, check your credit score at least once a year or more often now. And if you see anything there, just always dispute, always check. Keep good financial records. Good record keeping will give you proof if there are any errors in your credit report. Just saying, this is not me, sometimes doesn't really work. You have to really give that proof that this is really not me and this is my proof, Next slide, please. Get help. We have a lot of resources where you can get help. You have your free credit reports that you can pull every year. In here with the library, they have a lot of guidance also that can help you with your credit. Get help. Financial institutions, they can help you. They can guide you to see, how can you improve your credit. Nonprofit consumer credit counseling services. There's a lot of housing counseling agencies approved by the Department of Housing and Urban Development that can help you as well. Financial educations, nonprofit organizations just like this, take advantage. Any free financial education that you see, take advantage, take the classes. We all show a little bit different things about the credit, so you can always learn. It's free. Take advantage of these free programs. Certified financial planners, and there's others, but you can always start, with the nonprofits where they will not charge you any fees to continue helping you improve your credit. Let's go to the next slide. Credit repair scams. Promise to erase your bad credit or remove other negative. That's not really accurate many times. No one can just remove your credit, your bad credit score. So if someone comes and say, hey, I can fix your credit in 24 hours, Do not do that. Do not give your money. What you can do to pay upfront, some companies running a scam take money up front and never provide a service. So do not fall for those. They will not tell you your rights. They'll just take your money. So do not fall for any of those credit repair scams. There's ways that you can do it. You can write to the credit bureaus. You can you can send them letters if you see any, issues on your credit report. But these credit repair scams, do not fall for them. Next slide. So protecting your credit history. Initiate a fraud alert. This is a good option if you are concerned you may become a victim of identity theft. An initial fraud alert requires creditors and other businesses to verify your identity. The credit reporting agency you place the initial fraud alert with must notify other credit reporting agencies to place an alert. The alert is free and stays in place for 1 year. After it expires, you can create another one if you want to. So that's one way to protect your credit. If you are an active duty military person, you can put an alert. It's similar to the initial fraud alert, except that this is for the military members. Credit freeze. You can always ask to freeze your credit, prevents access to your credit reports. This prevents new credit accounts from being opened, and in some states, stops new accounts for other services, such as insurance and utilities. You will need to lift the freeze if you want to apply for credit, a job, or something else that requires access to your credit reports. This means you must plan ahead because it may take up to 24 to 48 hours to lift the freeze. The free credit freeze lasts for at least 1 year. For a free credit, for a freeze to be most effective, you must place a freeze at each of the credit reported agencies. Next slide. So our takeaway for section 3, your credit history does not have to be your credit future. You can always work on improving your credit. It takes baby steps. It might not change all at once, but you can work on it every day, every month. Do a budget. Continue, making your credit card payments on time. This will really help you improve your credit. And we do have, for more information, the next slide. And for more information about credit reports and scores, including information about credit scams, you can visit these agencies here, and you will have more information on how to, prevent scams and how to improve your credit. We had handouts, but next slide, please. Take action. What will I do? How will I do it? Will I share my plans with anyone else? So take action to improve your credit. Like I said before, you can always improve your credit. Your credit history does not have to be your credit future. You can always change it. You are more likely to take action if you commit to taking actions now. So just make sure that, you look at these credit agencies to continue improving your credit. Look for help, ask questions. And I would encourage you to go and pull your own credit after this class and see, how does it look? What can I do to improve it? And hopefully in the near future, your credit will be that excellent credit score that you saw at the beginning. And this is it for me. Thank you so much for listening to our presentation. And I will pass it along to my next colleague.
I'm so sorry. Welcome back. Thank you so much, Delmi and Michael, for that amazing presentation. Thank you for educating us on how how our credit scores work and how to improve them. And thank you, Delmi, for saying that there is no easy fix. Right? It's going to take time and effort. So thank you for making that very evident and clear. We really appreciate that. Thank you for all the fantastic information. We do have some questions. Um, and so we have a question from Sakina Brown, and she wants to know how reliable are the credit reports listed on Credit Karma or Experian? There's about a 30-point difference between what's listed there and my FICO score. So either Michael or Delmi, please, if you guys have any insight or could help us kind of parse this question, that'd be so great. Thank you.
Sure. Hi, this is Mike again. I would say the biggest thing is actually just knowing what's actually in the report and not focusing so much on the score itself. And because there's hundreds of scores out there. And so the score that Credit Karma uses is most likely going to be a different scoring model than the model that Experian uses. And so what we tell our clients all the time, or if I'm out teaching financial literacy, again, is don't focus really on the score itself. Really place your focus on what's in the report. So if you're looking at your, let's say, a line item in your credit, if it's a credit card or it could be an installment loan, you just want to make sure that, again, the information that's reflected there is accurate and correct. Make sure that you're paying your payments on time. And so you don't want to fall within that 30-day late range. You don't want any 60 to 90 day late payments because all of that will then in turn affect your score. But really, if you're looking at the report itself, if you have those types of items in there, then you would know it's going to negatively impact your score. But again, there's hundreds of scoring models. And so I, again, cannot iterate enough. Just don't focus on the score itself. Just focus on making sure that you pay your bills on time, that you actually manage your credit appropriately.
Thank you so much, Michael. We really appreciate it. Delmi, do you have any insight into this question as well?
No, you know what? Yeah, don't focus on that credit score. I do know that a lot of the times these other places that give the credit score, they want to charge you, and so they use different things to make it look like it's low, and then they'll tell you, oh, pay for this membership and we'll help you. So just like Michael said, just pay your bills on time and don't overuse your credit limits, and this will really help you improve your credit.
Great. Thank you so much, Delmi. We have another question coming in, and the question is, what can I do if someone has my personal information? And I guess when they say what can I do is, I guess maybe what can I do to stay safe if someone has my personal information? What do you guys recommend?
Well, on the presentation earlier, we said, initial the fraud alerts. Just make sure that if someone has your identity, put a fraud alert on with the 3 credit companies, and just keep an eye on your credit scores and pull that annual credit reports, but lock your credit. You're able to call them and lock it up, and if you need to go apply for a loan, call them 24 to 48 hours before so they can unlock it, so you can get those alerts if anyone is trying to open your credit with your information. So that is one of the best things that you can do to protect yourself if someone has your personal information.
Great. Michael, do you have any recommendations, or should we go to the next question?
Next question.
Okay. And Christina Brennan wants to know, how can I check my credit score if I don't have a social security number? I must have some type of credit since I have CCs. I've tried to get it using my ITIN. I don't know what CCs are.
Probably credit cards.
Oh, right. Sorry. Duh. The most obvious answer for sure. What do you guys recommend?
You should still be able to pull a copy of your report. They should be able to pull it according to other identifying information. So not just your tax ID number, but also utilizing your name, date of birth, so other information that's contained in your report. And so I would, again, go to the annualcreditreport.com. And if you can't get it by doing it online, call the 800 number that's there and request a copy through that method. And just to clarify also, whenever you get your annual credit report from creditreport.com, the free one, it does not come with a credit score. And so if you want to score him, if you want to see what your credit score is with one of those three TransUnion, you'll have to pay an additional charge in order to see that score. But again, like I said, really, I wouldn't focus much on the scores because if you your score changes frequently. So every time something is reported to one of the bureaus, it's going to affect your score. And generally, if you have different revolving lines, credit cards, they're reported every single month. Or if you have a spike in credit, it's going to be reported. So again, I wouldn't focus much on that. I would focus more on the information that's actually in the report.
Great. Let me ask you this. A while ago, someone told me that you should always pay a little more than the minimum amount. And I guess what I'm saying is, could you talk a little bit about how doing that impacts your credit score? I imagine that it would help to increase it if you pay more than the minimum amount and you pay it on time. So is it just paying it on time, or is it paying it on time and then paying a little more that is more helpful to increase credit score?
Well, with credit, I know that it helps to just stay within that 30% of your credit limits. So, that's what helps. If you have, sometimes it's better to have two credit cards that you use, through the month and keep each of those credit cards within those 30% of your credit usage. And this really helps you improve the credit. Because if you use like 50% of your credit card, but even if you are paying a little bit more, you're still over that 30%. So it's always better to keep it within those 30%. Use two credit cards if you have to, so you can keep, use that low limit on each one of them. And for me, that really works. That's what I try doing. When I use my credit cards, I try to make sure that I do stay within that 30%. So I do pay a little bit extra all the time, yes, but I do try to keep within those 30% on my credit cards so I can continue keeping a good credit score.
Great.
I'll just add to that. Again, those two factors, your payment history and the amount that you owe on credit cards, account generally, and most scoring models, those are the most influential things that's going to affect your credit, especially if you're, again, focused on score. And so, or you generally just building credit. And so you don't want to have a large outstanding balance, and you definitely don't want to have a large outstanding balance for an extended period of time. And so if you're making minimum payments, it's going to take you longer than to pay off that debt, which in turn is going to affect your credit. So if a lender's looking at it, they're going to say, okay, so you're only making the minimum payments, which means that you're probably only covering interest on the loan. And so you're not really paying down the balance. And so if you have that balance on there for a year's time, then again, when they're looking at that, they're going to say, do you really have the capacity to enter into new credit because you're having difficulties paying the existing lines that you currently have?
Yeah, thank you, Michael. I was really interested in what Delmy and you were saying, is that really what the number is a projection of your risk for lending you money, which I think we view it on another way. We maybe view it morally, right? Am I a good person? Is my credit high, right? But it's actually, like whether you're a risk for them lending you money, which is, I think, a very utilitarian and very kind of useful way to look at it. So thank you very much. This is all really good information. Um, you know, um, Let me ask you this. There are people who are joining us at different parts of the program. You guys have done an amazing job of really telling us the criteria and what to look for. For the people in the cheap seats or the people that came a little later, in terms of monitoring our credit, is there one thing that is, supersedes all? Is there one thing that we can focus our attention on, or is it several criteria, several things that we need to look at?
I would say just pulling the report on a frequent basis and making sure that the information that's contained in the report is accurate. I would say the last thing that you would want to do is to apply for credit and not know what's on your credit. So go to the lender and you're applying for a car loan, and the lender knows what's on the report because they've pulled it, but you have no idea what's on the report. It could be something that's not yours, and as a result, you'd be declined for credit. And so I would say just staying on top of, again, reviewing your report and making sure that the information that's contained in the report is accurate, especially due to identity theft. It is rampant. I can tell you from a financial institution perspective, the level of identity theft, it's increased, and it just keeps increasing over the year. So just pull your report and make sure you know what's in it.
Yeah, and dispute anything that's on the report that you know is not yours. I mean, it could be as easy as a phone number that's showing on your credit report. That's not your phone number. You can report it. An address. So review your credit report, know what's yours and what's not. And even, if you see that there's a late payment, but you know that you send your payment on time and you have proof of that, call the credit card company and you tell them, because it is your credit and no one else should take care of their credit more than you. Because, everyone else is just looking to see, well, if we lend this person money, are they going to be able to pay me back? That's all they can see, But for you, it's looking at, if my credit is good, I'm going to pay less interest rate on a car loan. I'm going to be able to buy that house that I want. So you have to, keep an eye on it, check it, pull it, and verify that information that is there, it's really yours. And if not, make a phone call, clean it up.
Beautiful. Thank you, Domi and Michael, for that bit of advocacy, because I think you're totally right. We have to take active control of that number, and we have to ensure that that number accurately reflects what our actual credit score is. Let me ask you this. A lot of people in our area, housing is really expensive in Southern California. Even the renters market is ridiculous. And so, I guess I have a question. What if your credit is actually, like, I didn't know that the maximum for credit was 900. I thought it was 800, right? But let's say your credit score is in the very good to exceptional range, and you're applying as a renter to pay, $3,000 for a house, let's say in the South Bay, and you're not getting any calls back. Is there a way to verify, you know what I mean? Like, because a lot of times I don't feel the companies make decisions just on the credit score, right? So it's like credit score and other mitigating circumstances, correct? So I guess what I'm trying to ask is there a way where we can ensure that our credit is being looked at accurately and is being looked at equitably, as I guess is what I'm asking. I don't know if it's even an appropriate question, but what kind of safeguards do people who apply for credit do they have for people misusing that number or ignoring it in lieu of other criteria that they might base whether or not to do business with this person on? Is it kind of clear, or is it a little muddled, the question?
So I would say if you're applying for credit and you're denied credit, then whoever's denying you credit must provide you a adverse action notice notifying you that they actually decline credit. And in the notice, they should list specific reasons as far as why they declined you. And so it could be balances on credit cards are too high, or you have limited credit history, or you may be overextended. So you may have too much credit and you've overextended that credit. But at any rate, if they're going to decline you, provide you an adverse action notice, and then also include in the notice the credit reporting agency that they received their report from, which will then enable you to a free copy of your credit report so that you can validate and verify the information that they're saying in their notice actually matches up with what's on your credit report. The same thing for employment. So if you're applying for employment and you're denied employment based on information contained in a consumer report, you're also entitled to want to go through and do the same exact thing.
Michael, thank you. I had no idea about an adverse action notice. That's actually a really useful bit of information to have as a person who's applying for credit. That way, it's very transparent, and we know the reasons why someone is denied. Right? That's actually great. Thank you. Delmi, would you like to add something to that?
No, it's great.
Excellent,
Yeah.
excellent. So guys, we have about 10 minutes. We're almost here. I really appreciate you guys answering these questions. I really appreciate your advocacy on behalf of our patrons. It's really inspiring. Thank you so much. Another question is, does it help to pay all you spent at once during the month? This is pretty, you know, straightforward credit question. What do you guys think about that?
Really, you just want to show that again that you're utilizing your credit. And so it's different for, I would say, for everyone, because everyone's circumstances are a little bit different. And so if you can afford, I would say, to pay off your balances, I would say that's good. In most cases, if you pay within a certain amount of time, you want to accrue or be charged interest. And so that may save you money. So you can still utilize the card. If you're paying it, again, within that grace period, then no interest. If you are utilizing it and you cannot afford to, again, pay it off every single month, but you, I would say, you're going to rob through the PayPal, I wouldn't do that. To me, it's make sure that, again, you can sustain and then pay, I would say, definitely the minimum balance on the card. I'd try to pay a little bit more if you can. But again, I wouldn't make yourself cash strapped for that time period. Because generally what ends up happening is that you will then use the card more. And at some point in time, you'll probably end up carrying a balance because you won't be able to pay it off in full. At least that's been the experience that I see a lot of the time. So again, if you can afford to pay it off, pay it off. If not, it's not necessarily a bad thing because it's still showing that, again, you're utilizing your credit just so that you're paying it on time and you're not having outstanding balances for periods of time, etc. So.
Great.
Yeah, I can tell you that with me, I really don't like to pay interest on my credit cards. So I try to use my credit card for the things that I'll be able to pay that month, but sometimes if I take a bigger purchase, I would give myself a time limit. So I don't know, I bought a TV with my credit card, I will give myself 3 or 4 months, whatever it is, to pay for that. And I'll try not to buy anything else, any big purchases during that time so that I don't continue accumulating, that interest rate. Because interest rates could be really high. So you have to really keep an eye on that, so that's what I usually do. I try to spend, if it's my credit card to pay my gas, I know that I spend $200 in gas. So I'll save that money to pay the credit card, so to continue, keeping up with my good credit. And any big payments, I give myself a time frame and I pay it during that time, and then I start spending again.
Fantastic. Thank you. Thank you. That's really, really, really strong advice. I have one last question. We're almost at the end of our I guess seminar lecture on credit for today. And thank you again so much. full disclosure, I got into I got into a little trouble with credit, and I turned to a debt consolidation program. Could you guys talk a little bit about that and whether it's worth it to reach out to an ancillary company to help you to bring down that debt, or whether it's more advantageous to reach out to the actual credit card company and figure out a payment plan? What do you guys recommend?
Well, I would recommend reaching out to the credit card companies. A lot of the times they do work with you, but if you don't reach out to them, they don't know. They deal with so many clients, they really don't know. You can put your credit and, like, just try to get into a payment plan with them. It's the same thing, just the other companies are actually charging you to write the letters. So basically what they're doing is they're writing the letters for you. They're writing those letters, for you to send to the credit card companies or to the credit companies, so they're writing the letters for you. So that's what they're charging you for. So if you have the time, yes, it takes time. It's tedious. It's time consuming. But if you're able to, write those letters yourself, it helps. That's what they're doing, writing letters on your behalf.
Excellent. Michael, do you
I
have
would
anything?
agree. I would say if you're going to use a debt consolidation company, make sure it's a legitimate company that you've researched and they are very reputable. Understand the fees and costs that are associated with that service that they're going to provide to you. But again, I would go back to like what Delmy said. For the most part, I would take the reins myself and try and work with my creditors to bring my payments down to a more manageable level. And in a lot of cases, if you are, I guess, staying abreast of kind of what's happening with your credit, you may notice, or you will notice, that you're reaching maybe your credit line. So you may have multiple cards that are almost maxed out. I would say reach out to a credit union, reach out to a bank, and see, do they offer personal loans to where you can do your own debt consolidation directly through them, where they pay off the credit card companies for you. So generally, you go to them, you apply for a personal loan, and then they will cut checks to the different card companies or lenders who you have outstanding debt with, and then consolidate your payment into one. That then gives you a plan of action as far as how to go and actually pay off that debt.
Great answer, guys. We're at 58 minutes. I just have one last question. A lot of people who are paying student loan payments right now, over the pandemic, the federal government was paying off the interest. So I guess maybe a question is, does something like that adversely affect your credit score? Like, I've always made student loan payments on time, but I was going to take advantage of the federal government, paying some of that interest. My question is that a good plan? Should I have done that? I mean, it's, water under the bridge, but what do you guys think about that?
I would say afford to pay your payments to continue to make the payments that you were making, because again, over time, you're still paying down debt, which in turn is reducing the amount of interest that you owe. Also, under the Coronavirus Relief Act, the federal government made it so that if it is a federally regulated student loan debt, that again, they won't report any adverse payments, I believe, as of September 30th, 2020. I'd have to look to see if it was extended. But if you were to go to the Consumer Financial Protection Bureau, they have guidance on student loan payments as relates to COVID. I know that there's a white paper guidance for it, so I would check that out.
Thank you, Michael. Delmy, would you like to add anything?
No, just like Michael said, it's paying down loans. Yes, they're giving you a break on the interest, but student loans, they are not forgiven. They will always want, those to be paid. So it's always good to just pay it a little bit, because either way you would have to pay them.
Yes, absolutely, completely true. So I just wanted to say thank you so much to Michael Bailey and Delmy Martinez. We really appreciate you guys coming through and educating us on how to improve our credit scores, how to maintain it, how to really get a grasp on it. There's so much shame sometimes surrounding this, and people would rather just let it kind of leave it in a pocket of forgetting, right? And this is not what you guys advocate. So thank you for advocating for that, taking control of that credit report and your credit to live a better life. And we really appreciate all that you've done today. Thank you so much, folks. Have a great day. And again, thank you so much for your advocacy. We really appreciate it.
Thank you.
Thanks, guys. Have a great one. Okay. Thank you.
Night.